Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their stories to their opportunities and risks. Today I'm covering Target, the big box retailer. Let's start with the company's business strategy. Target is a retailer. They're going to buy goods and sell them for a little bit higher price in a single store. They want to have everything in that one store. And one of the things that is a big draw for customers is groceries. That's something that the company has moved into a lot over the last decade or two, but they're also moving into more owned brands. Those are going to be a little bit higher margin than typical brand products. It also shows that customers are going to Target because it's Target, not because they carry Bounty products or General Mills cereal. They're also leaning into their digital experiences. That includes pickup, drive up, and shipped, their delivery service. All those things are tied together in a product they call Target Circle. And for an annual membership, you can get free delivery. Those goods come to you in about an hour or two, so you can do all your grocery shopping from home. And that leads us to the growth opportunities for Target. This is not going to be a high growth stock. We're going to potentially have low to mid single digit same store sales growth for Target. And the company's footprint is not expanding all that quickly. They tried to expand into Canada. That was not particularly successful. So this is a US centric company. But where they do see growth is in these digital products I mentioned earlier, making it convenient to order goods online and then simply drive up and have someone put them in your car leverages the advantage that Target has and the physical infrastructure that Target has all around the country. The Circle membership program is a little bit analogous to Amazon Prime. So it's going to get you some of those same benefits. And even the Target credit card is going to give you a little bit of a discount just for shopping at Target. So they're trying to build that moat around the business. And if they're able to do that by leaning more into these digital products, that's how they're going to provide a differentiation over digital first solutions like Amazon or companies that are leaning into more of a rural market like Walmart. But as with any company, there are risks. And in retail, there are a lot of risks because there's a ton of competition. We have seen Amazon take significant market share. That market share growth is starting to slow at Amazon, but that's now an international company. Walmart is another company that is much bigger, can provide lower prices because of their scale. So Target needs to lean into their niche space in the market, a little bit more of an urban and ex-urban business. That's why you're going to see a little bit higher end stores than you get at Walmart, a little bit more design focused than you get at Walmart or Amazon. But if customers are looking for the lowest price, Target probably isn't where they're going to be. And let's not forget about a big competitor like Costco, who's going to keep customers coming back with their membership program and consistently lower prices than you're going to get at a traditional big box retailer like Target. So what's my prediction? Target's not going to be a high growth company, but it does have a solid niche in the big box retail space. And with products like their digital products and their Circle platform, I think they have a solid future. And the stock is just too cheap to pass up. Trading for about 11 times earnings right now. This is a phenomenal value for a very solid retailer. There are, of course, questions ahead around tariffs and what the economy is going to do. But when your starting point is a low PE ratio, that provides a nice risk reward for investors. So what's the recap? Target is one of the biggest retailers in the country, competing primarily with Walmart and Amazon. They moved into digital solutions like drive up, pickup, and their ship platform. And the stock has an extremely low price to earnings multiple, making it a solid value stock today. Now with the Motley Fool, your comments make us all smarter. So please comment with your own research and insights about Target and tell us what stocks you want to see next on Crunch Time. Of course, check out fool.com/invest to get the top 10 stocks to buy right now. Thanks for watching, everybody. See you here next time.